It's kind of funny when you think about it. Every single day, we trust our money completely. We trust that the numbers in our bank account are real, that the paper in our wallets actually means something. It's this invisible layer of trust that lets our entire world function. But what happens when that trust shatters? What happens when the money itself is the thing that breaks? And that's the big question, right? If what we have works, why on earth would anyone need to go and invent a whole new kind of money? Well, to figure that out, we have to become detectives. We have to look back through history, because the answer isn't in the future, it's buried in the past. All right, so our investigation kicks off in a place you might not expect, ancient Rome. For hundreds of years, the Roman Empire ran on a solid, stable silver coin. It paid for armies, it built cities, it fueled trade. But when the empire started feeling the pressure, its leaders found a very tempting shortcut. And this is what they came up with, a sneaky little trick called debasement. Think of it like this. If you can't raise taxes, you just stretch the money you already have. You take your pure silver coins, melt them down, and mix in cheaper metals like copper. Suddenly, you have more coins to pay your soldiers. It's a short-term fix, but it's a deal with the devil. And just look at this timeline. It's wild. What started as a tiny change under Emperor Nero spiraled out of control. Over a couple of centuries, the Roman denarius went from being almost pure silver to basically a bronze coin with a thin silver coating. The government kept pulling this same trick, and each time, it poisoned the currency just a little bit more. So you see, the real issue here isn't the silver. It's not about the metal at all. It's about trust. The moment people realized the coin in their hand wasn't what they thought it was, the whole system started to fray. And once that public faith is gone, getting it back is next to impossible. Okay, so let's jump forward in time, a long way forward. After the absolute chaos of World War I, global leaders were determined not to repeat the mistakes of the past. They decided to build a new system, one anchored to something physically rare that no government could just print more of: gold. But here's the crazy part. This system, which was supposed to be the ultimate anchor of stability, was a total disaster. It didn't even last 10 years before it completely fell apart, making the Great Depression that much worse. The problem wasn't the gold, it was the rules of the game. So, what was the fatal flaw? Well, the system was just broken. It was completely lopsided. If your country was losing gold, you were forced to slam the brakes on your entire economy. But if you were a country gaining gold, like the US and France were, you had zero incentive to do anything. You could just sit back and hoard it. This created a deflationary death spiral for the weaker economies. And get this, in 1929, the world had over $9 billion worth of gold reserves. Sounds like a lot, right? But because of all these rigid rules, only about $2.1 billion of that was actually available to be used. The rest was legally locked up. The whole system was incredibly brittle. It had no flexibility, so when the pressure got too high, it didn't bend, it just shattered. Okay, so we've seen a slow, grinding failure in Rome and a rigid, brittle failure with gold. But what happens when the brakes fail completely, when a money supply just explodes? We've all heard the word hyperinflation, right? But it's not just inflation, but faster. It's a totally different beast. It's a complete loss of control. It happens when a country's ability to produce things collapses, and the government has no choice but to print money just to survive. Just look at these two examples. They are absolutely mind-blowing. In 1920s Germany, prices were doubling every few days. But fast forward to Zimbabwe in 2008, prices were doubling in less than 25 hours. Imagine your life savings, everything you've ever worked for, becoming worthless overnight. 89.7 sextillion percent. Let that sink in. That's a number with 21 zeros. I mean, it's not even a number anymore. It's just a symbol for the complete and total death of a currency. So that brings us to today. The system we live in now was born out of those past failures. The goal was to avoid the rigidity of gold and create something more flexible. But, as we're about to see, that flexibility creates a whole different kind of tension. August 15th, 1971. That was the day. That was the day the game changed for everyone. The US dollar was officially disconnected from gold. And because the whole world was on the dollar standard, every currency on Earth was suddenly floating freely. For the first time in history, there was no physical limit on how much money could be created. So how does this new system actually work? Well, the core idea is pretty simple, but it's a little mind-bending. When a bank makes a loan, it creates the money for the loan itself. but it doesn't create the extra money needed to pay the interest. So where does that money for the interest come from? Well, it has to come from more loans. The system requires more and more debt to be created just to service the old debt. It's a machine that is literally designed for one thing: to expand forever. So, okay, we've seen this pattern over and over again, right? Rome's debasement, the gold standard's rigidity, and now our system of perpetual expansion. This recurring problem of an unstable money supply is exactly the puzzle that Bitcoin was designed to solve.
Think about when Bitcoin showed up, late 2008. I mean, that's not a coincidence, right? The entire global financial system was on the brink of collapse, and trust was at an all-time low. Bitcoin wasn't just some new tech. It was an answer to a very old question.
And what it really comes down to is this fundamental choice. It's a choice between two very different ideas of what money should be. Do you want a money supply that's elastic, one that people can change to solve political problems? Or do you want a money supply that's governed by math, one with rules that are set in stone and can never be changed? And if you look at how it's built, you'll see it's a direct answer to every single historical problem we've talked about. It's decentralized, so there's no Roman emperor who can debase the coins. It has hard scarcity, a fixed supply, so there's no printing press to cause hyperinflation. And it's all transparent, so the rules are the same for everyone, enforced by code, not by people. And if you ever needed proof, here it is. This is the headline that was embedded into the very first block of Bitcoin ever created. Chancellor on brink of second bailout for banks. It's a timestamp, a permanent record of a moment in history when the old system was doing the only thing it knows how to do: expand the supply to fix a crisis. It's a quiet, profound message. It suggests that if the problem is a money supply that humans can break, maybe the solution is one they can't.